it's Mike Lynch with AmeriFirst Financial. It's time for Monday morning mortgage update for the week of August the 22nd. Happy Monday morning. Hope everybody had a great weekend. Gail and I actually got up into the hills and got out of the heat, rode our mountain bikes, and just had a great weekend getaway. So let's talk about what happened last week and what's going to happen this week. Last week, we actually saw rates get worse. The mortgage-backed securities market moved down 45 basis points, and the rates ended the week higher than they did when they started. So what was the cause of this? The main thing, or the theme of the day, if you will, is a slowing economy. And there was some reports that came out last week that showed this. The Fed acknowledged that the economy is slowing down. They don't do this very often. Jobless claims were up on Thursday. A lot of housing news last week that showed the housing market is slowing. We all know this. We see it. It's correcting. Even though it's still strong, it's not as strong as it was. And then retail sales, what people are buying was pretty flat. Actually, it was really, really weak. So that caused us to have some negative outlook on the future of the economy. And typically, when we see a slowing economy, however, we see interest rates get better. Why was the shift? Because inflation is still a big issue. It's a big, big issue. And inflation is the worst thing we can have for mortgage rates. We've talked about that many times. So what are we looking at this week? Three things. Inflation, number one, surprise, the Fed, and then manufacturing numbers. So let's talk about inflation. A big report coming out Friday, the PCE. It is the Federal Reserve's key measure, the main thing they look at when they look at inflation. They have a target number of 2%. And the PCE is double that. Basically, what that means is the Fed said, look, we want to keep inflation at 2%. They ignored it last year, and it's out of control. They're raising the Fed fund rate every single meeting to try to fight that. It takes time. It doesn't happen overnight. And so we'll look at this PCE to see if anything really has happened. We know the CPI and the PPI that came out a week and a half ago had high numbers. They weren't as high as they'd been. So big numbers that we'll be looking at on Friday. And remember, the bond market is very sensitive to inflation. Why? Well, let's say that you have $1 million in bonds and you have a 4% yield on those bonds, or 4% rate, right? And inflation is 1%. 1 minus 4 is a 3% rate of return. Now, if inflation goes up to 3 and you still have those bonds, now you get a 1% rate of return. So they raise the yield on bonds. Corporate federal government raises those yields on those bonds, which is basically an interest rate, and that's why interest rates climb when inflation climbs. Okay, so also inflation is expected to be high in Europe. We're going to look at those numbers this week to see if that's the case. We've seen high numbers in the past. Even though it's our bonds, it's global. We are global. People invest in our bonds. So again, we'll be paying attention to that. Second thing is the Fed. The Fed doesn't have a meeting this week, but they kind of do. They're meeting in Jacksonville, Wyoming. All the economists, the Federal Reserve chairman, and all the members are meeting in Jacksonville to really talk about the economy. There's going to be a lot of news media, a lot of attention to it. Everybody's going to be talking. And so we'll really pay attention to see if they are going to continue to be aggressive in raising rates moving forward. They've been raising rates. The Federal Reserve has been raising those rates, and then some people thought, well, they'd raise them, then they'd dive. A lot of people think they're going to raise and then level off. When's this going to happen? When are they going to level off? Do they think that raising that Fed fund rate is really fighting inflation, which ultimately is going to slow our economy, which ultimately will bring mortgage rates down? So a lot of news, a lot of media is going to pay attention to what they think is going to happen. And then the third thing is manufacturing. So are businesses building stuff? Are they making stuff? Are they making more products so they can sell it? Are they slowed down? A lot of manufacturing numbers coming out this week. And if we start to see a slowdown, again, that's another sign that the economy is slowing down. Ultimately, we want inflation to come down, but we'll really be looking at those numbers. And interesting, raw materials that we get in this country to make a lot of stuff come from Europe. And they're having some big supply chain issues and issues delivering those raw materials. So that's actually driving prices up, which is in a form inflation. A key aluminum manufacturer in Kentucky just shut their doors last week because of high energy costs. So these little tiny data sets that come out that really show inflation isn't under control. It's widespread. It's global. it's affecting our economy. That goes back to our number one thing here was inflation, and inflation really is driving mortgage rates. And until we get it under control, these rates are going to go up. So, what are we looking at this week? It's going to be not a friendly week for rates. We're locking. The market's already down. In fact, if we want to go to the charts, let's look at mortgage-backed securities. This is a graph of mortgage-backed securities. And anytime we see the green, anytime we see these numbers move up, that's good for interest rates. Okay. Anytime we see the graph go down, that's bad for rates. That means money's flowing out of the bond market. And you can see what happened last week and really what happened today. We already had a rate lock warning today to lock an interest rate if a client was floating it. And there's a lot of movement to the downside here. We really expect or have the potential of these rates to get worse. So we're starting the week locking. We're not playing with anybody's money. Somebody needs some insight on mortgage rates, you can forward this to them. If they need advice, you can have them call me. If you know somebody, again, that could benefit from this video, please send it to them. If you have any comments, I'd love to hear them. Have a fantastic, productive week, and we'll talk to you soon. Bye-bye.